Alrighty, we are 10 minutes from the London Open. Technically, East Coast, it's Wednesday the 12th of October. Um, I've actually got ES up because I've been working on calibrating these backgrounds to show me when there's momentum shifts that uh, identify areas that will be potential pivots in the future. And then also working on these arrows. Now, the arrows are showing up way more often in ES than they are in NQ. And so I have to, I'm not, and I don't have a trade really that uses these yet. They're still kind of in review even on NQ. I got one or two trade ideas with NQ, but I do not have those tested at all in ES. And so I'm not gonna be too worried about that. I'm gonna watch them, but realize that they're showing up a lot more than I would expect. For the moment, though, they seem to be working, and it might just be that ES just trades a little different than NQ. They're basically showing where the market is getting like passive absorption, where like either like for the yellow ones, it would mean that there are sellers, or usually one seller, like campaigning a level, basically like adding back in um, to their orders on the limit on the order book. You don't really see it on the footprint, but you could see it on the DOM. But I'm just telling the what's it called, the algo to read the DOM. The question really is, I think the reason why there's two reasons why I think it's firing more on ES than NQ. NQ does a lot of pivoting, and so I had made it not so sensitive, because I don't really care about every single tick of movement on NQ. I really only care if it's like a more significant movement than that. Well, with ES, like ES can take like a long time to move one tick. It's one tick on ES is often meaningful. So yeah, I believe that's the primary reason why we're getting more signals. Is it's just, yeah, those are actually, I guess, two reasons. Is that it's they don't pivot as often, and so you're going to see them support those levels. Like NQ pivots constantly, you know. ES like does it trades in between levels. It does a lot more like mini momentum like moves. NQ does a lot of the rebid reoffer kind of dance, above below, test, reject, right? ES will just go test, reject, and so you'll get, and sometimes it's like test, reject, right? Like that certainly happens. I'm not saying it has to be just like one time, but it's nothing like, even in this little, like if you just look from midnight central to now, like ES started down here, it came up, it hit like 36.24 or so, bounced back one time, right? Broke this one out on a pink bar, came back in, tested the VPOC of that breakout bar, and bounced. Like it's pretty straightforward. Whereas on NQ, in that same exact time period, we had little rip, little rebid, and then this is rip number one, tiny rebid, little breakout, and then take out this pivot, right, to the downside, then take out this pivot, then rebid, breakout, take out this pivot, breakout. Only then, and remember, and then look at this, ES just like ran out of buyers and shifted volume lower, making it very, very clear that that was a short for a scalp at least. And here it was like pink bar, orange bar. That could be it. You could get short there. It comes back. It takes you by like 4 points and then signals again to get short. And so it took 2 tries on NQ. And that's just the way it works, right? So on NQ, you can see that we got the arrow, the yellow arrow, only here. We didn't get one anywhere in here. And we didn't get one all the way up. See that? We got a blue arrow, but no yellow arrow until right before they started to fall. Well, meaning, like I said, that there was like a bigger volume player that entered the market on the short side and appeared to be campaigning this level in a way that it was different than before. Here, it happened at the same time, right? But we got it right before that drop for sure. But then we also got one back here where this seller tried to defend this level here, and they just ripped right through them. And so you can't, especially on ES, you can't just short those arrows. But what I have been saying, I've been doing with NQ, is they add evidence to my to the trade entries that I already have. They add evidence that if the trade works, that level can be like reused again in the future. So this one they ripped higher, so it might turn into support. I don't know on ES. On NQ it does do that sometimes, but what I know definitely should work. I won't say it will, but it should. Is if you mark off the area where the arrow came in. Whoops, I did not do that right. There we go. And then if they, wow, I can't grab that arrow. If they do push it down, if it's a yellow arrow and they push it down, when they come back in here, what we should expect is for that seller to show up again. That would be the expectation. And we can, I mean, I'll quick swing back and show you that. So here's one here. Okay, seller campaigns at this level, won't let the market, absorbs all the buyers in this bar and won't let buyers get through his order. Like he's reloading basically, kind of like an iceberg. It's not necessarily an iceberg, but it's like that kind of behavior. And then when they come back in, he reoffers again, and then they come back in here and he does it again. Now it doesn't mean it's always going to work, right? Like buyers could take over at any time, but notice that repeatedly there are attempts to defend the level. It doesn't mean it's bearish. It just means it's a level that, like, if I'm bearish, that's probably a place to watch for a reoffer. And now what I don't know yet is on ES whether or not trading through those, like in this case, getting through that important area, I don't know if that makes it way more bearish, or if you need a retest. Because on NQ, you need a retest. It needs to go under it. It needs to come back up and reject there before something that's like broken out can then be considered a bearish pivot. Sorry, doing some laundry. That's something I just have to continue to observe, because I just don't trade ES that much anymore, and I certainly don't know how it's going to work with these new calibrations. So let me just get rid of all the lines here. Okay. So again, this here is NQ, the 24 tick, and this one is the 8 tick ES. I realize watching two markets at the same time is hard. We actually don't really need to see these. The momentum is already built into the signals. Volume we should be aware of, but yeah, we basically just want to watch the current bar and whether or not when it closes, if it gives us a signal, and then we have to know where would we be interested in taking a trade? And if those two things line up, then we're good. That's not the algo. That's just my dryer. I'm pretty sure that's the last one. My apologies. Um, so, for example, in ES here, if we're bearish at this level and we get a retrace into this zone, a short makes sense as long as it sets up. It still needs to trigger. I can't just like short as it goes back in there. But for sure that bar with the orange inside, this VPOC pivot here, the orange bar here, that, if you look, the arrow showed up here and they re-offered it and then rejected. And in Q it looked like this, right? But on ES 8 tick it just was a wick. It didn't even close another bar. But the arrow here may not be a short on the pink bar, but it makes me way more confident to sell the orange one. So hopefully that makes sense. Because they wicked up to it and rejected, and then I got the signal to go short anyway. And obviously not every single one is going to work. But for instance here, if I knew I wanted to if I knew I needed another algo signal, like a diamond or a colored bar or a star to the downside on a bearish bar, but I also wanted an arrow, this one doesn't give it to me, and this one does. So, and you can see that they traded above this one. So this one actually stopped out, and this one didn't. So that was the intention. It's not 100%. If you wait for the arrow all the time, you'll miss a lot of good trades. But certainly what I basically built it for was in these situations where I take this short and I get 10 points off and then my runners get taken out and they immediately come back in, I hesitate trying to decide whether or not I want to get into the trade. And it rarely, if you see, it rarely gives you another opportunity to get in. And so it's important to have confidence in that situation. You can just do it all the time, but if you think about it, if you shorted, that's not really an entry. Let me find a real one. Here, this one. Let's say you shorted this. Same thing happened. You got your risk off, so it's a risk-free trade. It comes back, it stops you out, and then it triggers again right here. You'll do the same thing. You'll get maybe your risk off, and then you'll, get stopped out on your runners. And it's like, it's just, you end up doing a lot of work and like basically just paying fees and breaking even. But if instead I said, okay, I'm going to take this one because it looks like it might be bearish, but when it stops out, I say, all right, I'm going to wait for an arrow now. And so this one I would skip and this one I would take, right? That's the theory. Whether or not it's going to work like that, I'm not sure, but that's the theory. Let me get rid of some of this shaded stuff because that's from earlier. Okay, so whenever we get these shaded the background colors change like this, it's a potential momentum shift if we can get the market to get beyond that and develop volume beyond it. Meaning the yellow line here that goes, it interacts with the bars at the dash, which is the POC of the actual bar. If we can get one of those to be up above the bar that's associated with this purple background, so in other words, if this bar has a VPOC that's up here, and it closes bullish, the potential for like a shot back up increases significantly, because this bar, they tried to shift momentum to the downside, and so establishing volume above that basically says that buyers are taking a stand against the sellers who are trying to shift momentum. So you don't short when it changes color. That's very important. That's not a good idea. Instead, you actually look for the market to break beyond it and move volume higher. The other option is if that doesn't seem to happen and you go lower and then you come back and re-offer into it, like retest it and then reject on NQ anyway, those end up being pretty good shorts, and I would rather short on that retest rather than the breakout. So I'm not shorting this, but if it broke down and it came back up and retested that area and rejected, and it gave me a star or an orange bar or a diamond, I will take the short. And then the same thing with the pink, only opposite. So like this is not a long, but if we get under it, come back up, retest it, and reject, that's a short, right? And then if you continue over it and you come back in and bounce off of it, this could be your long, technically. But then you'd have to get out here when this one gets broken down with an algo signal. You'd have to switch short here because this is clearly a short signal because you've got two things going on, three actually. You've got a trap back in trade. That's valid even on the trade and perform algo. That's a valid signal right here. There's no actual algo on it, but because it trades behind this little triangle and then comes right back in on one bar, it's automatically a trade. It's hard for me to see on this system without the lines on them. But for some people, that's actually easier. It's just my brain needs it needs to watch the red line and see it break, and then that way. And then I like to have the algos on the entry bar so that I stay attentive to the fact that and confident that there actually are aggressive sellers here, even if it doesn't meet the criteria of the star or the orange bar. There are aggressive sellers here, which is what this the purple diamonds are basically just it's got unusual volume, and there's a volume anomaly there, some kind of delta situation that's just different. Oh, here we went away, but this actually triggered long. They trapped this star bar at the low. See how it lined up with this purple background, and then they broke out of it with the green bar. So that's a scalp. It's not a huge high odds trade, but it's just a trap trade. So now we've established volume though above the purple background bar. So if we come back in here, the buyers should support that level. You'd think. Let me just double check and see what's going on. Oh wait, that might be a short. Let me just check something. It's a little tricky to do this and talk through it with two different markets, but I'm doing this. Let's make this just a little bit smaller so we can actually see them, and we don't need the higher time frame. So let's do this, because otherwise it's too hard to know what's going on. I'll do my best to watch both. I'm like I said, I might not trade. I'm typically more comfortable trading NQ because it gives me more scalp opportunities, and especially in this session where it doesn't always move much. ES can be right now it's moving, so I could this set up beautifully. So if it keeps doing that, I'll trade ES too if it sets up. But what I really want to do is just observe ES and see if I can identify some of those same patterns, or if the patterns are different versus NQ with these new signals, the background bars and the arrows. That's primarily what I'm looking at with this, but if it sets up, I'll take it. Oh, the other thing that's different about these two charts is this one has a second set of channels here. It's got this shaded area channel, and then it's also got these here. Let me simplify this. Let's do this. Hold on. Sorry. Oops. And that's good. Okay, and then yeah, the shaded ones are something I'm watching for a potential signal, but I don't know what it is yet. Oh wait, I've got to save that. I don't know what the criteria is yet, so like I said, it's hard to watch more than one thing and evaluate it. It's really hard, and I've already got two that I'm kind of looking for, so I'm going to turn the rest of that stuff off and then I can always turn it back on.
Here's something I found on the web.
What?
Holy crap is a food brand.
I didn't even say that, but okay. Alexa's just here and shit. She didn't like that. Okay, so we got a purple background bar on 24 here. On this on the NQ. See, this one also. Oh yeah, we already set this setup here. But see how they're putting the purple background bar in the same spot, and buyers are trying to support this. So if this comes out with a star or a green bar, it's technically a long. It's not a super high odds long, but it is a long. Assuming it's not bearish, like assuming you're not like getting momentum here. And I mean, the times it loses is when it's got momentum, and yeah, there may be some momentum here because this was London Open, and there was what's it called, open drive lower at London Open. Doesn't mean it has to be bearish, but yeah, if it's going to be bearish, that's usually what they do. But like I said, since we did develop volume above this purple bar, this purple background, usually the first test in gets a bounce. It doesn't always get a buy signal, but it gets a bounce. But notice here on ES, the closest, like that one's above us, and it's the wrong direction. The closest, I guess this one didn't really count. It's like too small. I don't know where this comes from. Oh, it's way back here from the regular trading hours. Oh, and I don't even have it marked right. It's this one. It's the first one, not the last one. And then there's another here. But these are from a long time ago. I don't know how long these are going to stay active. But those are the ones that are nearby. Let me just make sure that these are adjusted correctly. This one might be smaller, but such a small bar, I'm not going to really count it. Let's see if these, yeah, see how they're acting like support resistant pivots, right? They don't last forever, but see that? It's hard to develop volume beyond them, and when we do, we move further. See? And so this is wrong. Hold on, that's wrong. It should be here. That's kind of sloppy. Okay, that makes more sense. So what we should expect is price to move level to level. Oh shit, look. So see how this, they've traded under it and they came right back in with the green bar. So that was an entry. I just wasn't watching it. I was playing around with the ES chart. But there's no star in it though. It's not super strong. It's just the arrow. What's better now, the better entry, is actually to trade slightly under it and then spike up with the green bar. That's ideal. Getting in when it's just an arrow and a green outline bar is really aggressive because the green outline bar basically just says, wow, we traded much lower than we'd expect for a bar that closed bullish. Well, when it's bearish, that happens a lot. So those are only going to work if it's balanced or bullish. Otherwise, they're just like asking to get trapped. But like I said, the arrow means that there's a buyer that's trying to support that zone, and he might just take it, right? Like they might just let him have it. Sellers might just fold, but what usually happens is sellers try to push through them, and then he like campaigns the level and adds to his position. And once that happens, sellers usually give up. It's kind of like in poker, like you might call a raise pre-flop, but once you see the flop, like all of a sudden your hand might not look so good, right? So sellers might be really confident that with this volume shift here that they're going to get lower. And so like when this guy shows up, they might be like, nope, I'm fighting you. I'm going to call a raise or whatever. But then if they can't get, or even worse, if they get through this and then the buyer just shows up again aggressively, they might be like, you know what? I really liked the short up here, but I'm not going to keep selling it. I'll just cover. And suddenly that aggressive buyer gets a move to the next level up, and that's just how NQ trades. Like it doesn't even have to be bullish for that to happen, but the great thing is when it does happen, like when I get that retest, I can get in something like, let's say like 917 maybe, just to be conservative, and then I can get all the way up here to like 47. So I mean those, and that's a 30. Let's say it's a 30-point win. It's $2 per contract per point. Sorry, $20 for the minis and $2 for the micros. So if you're trading one mini and you get 30 points, that's a $600 move. Like I don't know about you, but like having a consistent way just to make $600 when the market does that, like this, $600, maybe 500 because it didn't quite make it. Like it does that all day. Like I don't need to know that the market's going higher or lower if I know that it's going to consistently go like 20 to 30 points higher. I'd much rather be the guy grabbing 30 points here and there than the one who has to guess which direction the market's going to go at the end after that, you know? And so the idea that like you could get paid like real decent money just for identifying that pattern, and that it doesn't even have to break like the high. It just has to go where it is expected to go, you know? Like it just has to go back to the mean. And it can and they'll pay $600 a contract. Like it's kind of mind blowing, right? Now the thing to keep in mind though is that you do have to have a stop loss in, and that stop loss for us is usually about 15 points. So you could lose, $300. Like that's pretty normal, right? Nothing's perfect, and sometimes they're gonna stop. So you need a decent win rate to be able to make it work, and you need to make sure that you're not trading just because you want to be in the market, but that you wait for that confirmed, reliable, objective, repeatable signal. Because I mean, while past performance is not indicative of future results and all that stuff, like I would much rather use a pattern that I've seen work repeatedly in the past to give me higher odds that it might happen in the future, right? It's just my own belief that like since it's been doing it, that the market has that inefficiency, and so you might as well continue to hammer it as long as it continues to work. And like I said, to accept that past performance doesn't mean it's going to happen, but even as long as it happens sometimes, I can still get paid. Like I don't know, it's kind of nuts. Coming from a perspective of a swing trader, where like I'd be in the market and have like a target that was like the high from 3 days ago, right? And it's like I want to get in. I want to see if I can get the high from 3 days ago, and I'm going to put my stop loss below the low of today, right? Like that was what I was usually doing, and then you go into the next day and like everything's working, and then like day two, but you don't take profits because it hasn't hit your target, and then day two there's some like big news comes out or something, and it takes your stop, and then it turns around. Like those kind of experiences were so frustrating because like the time was so stretched out. But for me anyway, like scalping futures, like even though the amount that I might lose is actually the same, the fact that like I get an opportunity to get right back in, that I'm gonna know if I'm right or wrong within like minutes, and I don't have to wait another week to see if it's gonna work, is just like for me, it's as long as I have an objective way to do it and I know how to like not trade, because the problem is that you have access to the market so often, and so if you do tilt, you can go on absolute crazy like drawdowns, but as long as you can not do that, and I thankfully I've got a coach to help me with that. The instant gratification of like identifying whether or not, like it just basically means that my stress of being in the market is reduced, because I'm only in the market for a short amount of time, and I'm gonna know whether or not that trade is working. And then when it's working, it just pays me. I don't have to hold it and like go to sleep and then wake up and find out that some like, I don't know, like Fed speaker said something or whatever, and they stopped out my trade, and then by the time I see it, it's already gone back to way beyond where I entered the first time. It's like unless you're watching the market constantly, you could like miss out on the spot where you actually get stopped out. Now that can still happen in futures, but with futures, with scalping anyway, like it's okay if I miss it because it's just gonna set up again like in a couple minutes. And so I don't know, just like with the fast paced lifestyle, like it fits me better to not have to be. It's more uncomfortable for me to hold overnight and to hold like for long periods of time when the trade is working, knowing full well that at any time that stop could get taken. Um, when it's days and days and days, it's really really hard for me. And like I said, not everybody feels that way, but if that's how you feel, day trading and scalping might be for you. Because I had a really hard time psychologically with swing trading. I did okay, right? But it was like at times excruciating. And I wasn't great at it, but I understood it, and I had techniques that would work. It would just be very 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 difficult for me to stay true to those because, especially when it comes to the exits, because I'd have those situations where I'm in the market for 4 days. I thought it would only take 2 days, but the trade's still working, and now it takes me out, and then the likelihood that I'm going to go into another trade is really low, even though the probabilities might be that like what's it called, the like whip, the stick save, or like the where it wicks you out, like that actually probably means your target's more likely to get hit when it wicks you out and goes right back to your entry. Like those trades are actually, the second one is actually better than the first one, but it's really hard to take it, especially if you've been profitable in it for a long time and suddenly you lost money on it, and then you know that you're not going to hit your target today, but that you might eventually. I don't know. For me, it was tough, and I will still occasionally swing trade, but I try to limit it to like very like mindless setups because I'm just way more, since I watch the market so often when I'm scalping. I have a bad habit of letting my bias, like based on like what's working today, right? Like if all my longs are working, I'm gonna, like if I'm holding shorts, like if I've got like bull put spreads on, or I mean bear call spreads on, I might end up exiting them just because like my day trading is like showing profits only to the short side. Um, yeah, and that actually doesn't make sense. It's just a tendency I would have. So this one did just take off without that algo signal. Like I said, we weren't actually watching it when it triggered, and I haven't been taking them. But the thing is here we did trade above the we've now traded above these purple background bars with volume, and so pulling back and bouncing here does, it's the right spot for an entry. But on Simon's, you can see that it did not trigger. I guess it was a trap back in. Was it a trap? It might have been a trap. Maybe it was okay. Did I miss? Like I said, I was not watching it. It is a trap. Okay, it was a valid trade. Shit, that's frustrating. I distracted myself by messing around with ES, these channels, and I did not see that we broke this green line. And one bar later came back. I got confused because this wick didn't take it out. It was the previous bar, and it happened so recently that I actually missed it. But that's I explained the entry. I wasn't there to take it. But the good news is this area will continue to be support as long as it's not super bearish. So even if you miss one, I don't have to wait 3 days to buy it again. It can get back there in 15 minutes. And then I could also look up here and say, well, now I might have a drop trade to the downside. All it has to do is trade above this, which it did, and then roll over, which it might do, right? And then I can get it going the other direction. And even if I'm bullish on the higher time frame, there's nothing like all that. It's not all that dangerous to take counter trend trades as long as they're just scalps, and as long as I have a location and a valid reason to get in. And in here I would. I've got the voodoo range level, which is 10, 9, 48, 50. I don't have them on the ES chart. I should probably add those because it's right there. 36, 25, 50. That's the voodoo range level right there. So like they're both right here. Oops. Right there. Whoa. This one. Okay. So yeah, we're right. See how we're like right at that voodoo range level, and they keep rejecting it. That's it's not. It doesn't mean we're going to go to the low a day, but it's not what you would expect if this was super bullish. It doesn't mean it has to be bearish. It's just, yeah, it's a sign that those mean reversion algos are active.
Order filled.
So I'm gonna go ahead and take this just because we've already developed resistance above here, and we got a good move here, and we came back in, and then we got another orange bar. I'm gonna be quick with my exits though, because I'm really targeting just to get back in here. So I'll take some profit
canceled.
here. And so they say order cancel, but that's, if you listen carefully, there's actually a little ring in the background. That's the order getting filled, which is the target. The order that's getting canceled is the bracket order.
Order canceled.
So there we go. Hit the second one, which was my primary target. I will hold runners here just in case, but I expect them to try to buy this. Again, because this guy had that arrow. So we got a nice little payday there. That's nice. Yeah. Let's just hang out here for a sec. They're probably going to buy it back up. And I'm using it's a trailing drawdown account, the Apex account. If anybody wants a 50% off coupon for getting Apex evaluation, let me know. I have it, and I'm happy to share. But yeah, with the trailing drawdown, you really don't want to hold these runners too long when it comes to like pullbacks. I don't really like exiting at break even, but like since I know that this level has been support, if they struggle to even like, they just like slow down here, I'd rather just get out, because holding the runners and having it come back on you is as if I entered another trade. Even though I'm just giving back profits, from the point of view of the evaluation, it's as if you entered a trade right at your high water market of the day in the opposite direction of whatever you like wherever it goes. So like, yeah, if it rolls back on me like $100 or something, like even though I'd still be up like quite a bit on the trade, the trailing drawdown would show it as a loss of $100 from wherever I was at the high water mark. So it's harder. You're gonna miss big extensions because you have to be nimble. And so like when it does this, it's like, especially with that blue arrow, like I really kind of just want to get out of the trade, because there's a chance that they're just gonna rip it higher. But at the same time, so I'm gonna exit. If I didn't have the trailing drawdown, I would just hold it there, because this should be resistance. Should be. But the times it's not, it rips like 15 points in like a blink of an eye. Hold on, my cat is fucking with something. I'll be right back. What are you doing? Where are you? Get out of the thing. Are you hungry? Oh. Sorry, dude. cat, I swear, he can eat and eat and eat. Those Sphinx are just really, really hungry cats. So yeah, not surprised that they reject off of the channel. This probably goes quite a bit lower. It's like I said, it's frustrating having to take the runners, but I can't risk it rolling back on me. So I'm I'm trading with a big enough size that just getting 20 points here and there will very quickly qualify the account. So, and then what's nice with the Apex is, like, for instance, if you have the account and you need to make like $5,000 to get funded, let's say, in the evaluation, once you get funded, if you make more than $5,000, like of real money, then the trailing drawdown just pauses. And so then you can just trade however you want, as long as you keep that $5,000 in the account so that it's your money and not theirs, that it's at risk. But the trailing drawdown disappears, and it's only your profits that are at risk, obviously, because yeah, you earned that with their money. So it's a pretty neat system. But the challenge is getting to that point and adjusting your strategy to get funded and to yeah. So I mean, if anybody wants help passing that evaluation, let me know. The Trade and Perform Room has like a ton of people regularly taking those evaluations, and yeah, we can help you with that. So just you can DM me on Twitter, or else you can email my coach Simon, which is trade and the letter N and the word perform at gmail.com. Here, I'll put it in the put it in here. Email Simon, trading coach. It's trade letter N word perform at gmail.com. Request a free visit to the room. Mention you follow me and that I and yeah, and you'll get a free visit to the room for like about a week. And they are trading this, which is easier. You can see this entry was very obvious. Pink bar, orange bar. You can take that over and over and over again. This one you had to try twice, right? You do it here, you'd get stopped out by a tick or two, and then you'd get back in. But you'd get that. There's no pink bar here, so this one is more aggressive. And then pink bar, orange bar, get the roll down. And then purple bar, green bar is exactly the opposite of that, the inverse. So if you're bullish, you take this, you target that. If you get another pink bar, another orange bar, you can go back down, right? Like you just do that all day. Like here's another one. Like even when it gets bullish, pink bar, orange bar gets your risk off. And then you can get purple bar, green bar to go back up. Yeah, I don't know. I know it looks like a lot, but it's not as hard as it looks. It does take practice. Okay, here clearly I would have exited and I could have gotten long there, purple bar, green bar. I usually don't buy the first one after we break down underneath a purple background, because that area right there is going to now be resistance. The one reason to buy this is this blue arrow on the down wave means that this move here is probably capitulation on this tiny time frame. So there's a relatively good chance that if they can establish a low here, that it can fire off back into the trapped area, which is up here. The traders who are trapped are stuck up here. There's a good chance they can get up there. So it's actually a pretty good trade here. It's a pretty good long, but it's aggressive. But it's going to get you 15, 20 points a lot. But if you think about it, like if you shorted this, and you didn't have the trailing drawdown and you just waited until this and you didn't have to exit where I did, which was here. So let's say you did that. You'd get in around 35 and you'd be out by like, let's say 85, right? I mean, that's 50 points. And then you could get in here somewhere around 85. You might not get all the way up here, but let's say 05. So, I mean, another 20. So that's like 70 points of potential profits in a matter of minutes, you know? And like, you didn't even have to know which direction the market was going. You just had to know when to act. But it, like, it's that what I mean by you don't need to know which way the market's going is like, from here, I don't care if it does this or if it does this. That does not matter to me. What I want is the high odds entry, which was at the top. And then if I want to be aggressive, I can take this entry for the retest. And then you just take your profits, you know, as you get them. So you'd take 10 points, you'd take 20 points, and then maybe you'd have runners if you can. And if they go higher, cool, you get another 50 points. If not, it rolls back on you. You might like get like a little bit less, but you'd still have a profitable trade. And then if it goes down, well, then you just wait for it to set up again, right? Like, yeah, you're not going to be in the market constantly, but the opportunities are just relatively constant. There's almost always an opportunity around the bend, but it means that sometimes a lot of times you're just going to be sitting here waiting for the algo to tell you what to do. On ES, I wasn't able to really process both at the same time, but it did trigger short with pink bar star. The confirmation arrow was 1 bar late, so that's unfortunate, but can't have it perfect. But if you didn't get short here, and you saw the arrow, but you knew it was valid, and then I see the arrow there, and we got a retrace into this zone, I'm definitely selling it. You can see that this one was not pink, but we trapped underneath this green bar from whatever, I don't know where the pivot was, a long time ago, right here. So it was a high volume pivot. That's what the little diamond means. We traded under it into the area that has been expected to be support, and then got star off of it. So it's a scalp. I'd try to get 2 points there in ES is all I'd be looking for. Let me see if I got it. I think I would have. I didn't take it, but let's see. So let's say I get in at 11. Yeah, four points, give or take. A little more than 4 points. So that, and then your stop has to go at the low, so 05. So it's a little bit bigger stop than I'd prefer. It's 6 points rather than 5, but you know, if you could get at least 3 on most of those, and then sometimes have a chance to have runners go further, or just take like 4 every time, but like for instance, like take profit at 2, and then when you get to 4, just exit. Like you won't be getting 1-to-1, but if it works 60% of the time, which probably does to get 4 points, yeah, it works in your favor. But like the way my coach does it is he'll get in here. Once it gets above 2 points, he'll sell the first sign of weakness as soon as it starts to slow down, and then hold one runner. And if they happen to go 50 points, like that's cool, you know. I just don't do that because I'm using the trailing drawdown, and it would hurt me more to let that runner come back on me. I wouldn't just lose profits. It would be as if I entered a new position. So I currently can't do that on those accounts, but once I make enough to like create that cushion, that trailing drawdown pauses, and then all hell will break loose because I'll be able to do all sorts of things I can't currently do, but used to with the cash account. But what you'll see is the 8-tick ES on Simon's. The star, it's kind of high. Yeah. When I got this from him, he hadn't adjusted this correctly. But this star is associated with this bar. But see how you can't see any pivots to the left? So most traders would not be, in the room, would not be buying that unless you had drawn a line wherever that pivot was. I don't even think that was it. This one. If you had drawn a line on the pivot a long time ago, oh, not that one. It had to be the right pivot. Nope. Oh, maybe it didn't trap back in. It did not trap back in. So that's not a valid entry on Simon's system. And that's an example of a trade that with this system it's not going to trigger you in, but with my system, with my version of the algo, it would show an opportunity for a very aggressive scalp that may or may not continue. Because of the green background, it basically means, considering how far this went, it's surprising that we would get a close at the top of the Renko bar. And so therefore, it's either that we're in a really, really bearish market and they're taking profits and it's just going to roll over. That's possible. Or that there's an aggressive trader that showed up quite a bit further down in the wick and could have trapped some shorts. And so if that's too aggressive to take each one of these just hoping to get 3 or 4 points, then what you'd want to wait until one of them works, and then once you've got a bullish bias on this time frame, they'll start to work more often. But the star tells me that there was also an aggressive trader in here, so it's those two together is usually enough for a scalp if the location is good, and in this case, the location is near the voodoo range level, which was 606. I have it on another. So the voodoo range level is right here, and you can see that they traded just slightly below it, and then aggressively rejected lower. Right? Like I said, nope, no lower prices will be accepted. And because of the location of that, it's very similar to this. The only difference is this one had a pink bar, and this one did not have the purple bar. And the pink and purple bars are important because it shows where the move is losing steam, and price is for a pink bar is rising primarily because people are pulling their orders, and not so much because of aggressive traders entering. Whereas here, it's balanced between the number of orders getting pulled versus aggressive traders. And then this one, it's more aggressive traders than orders getting pulled. So it's almost like a spectrum, right? With the purple and the pink bars being the market is very easy to move through. And we are primarily moving because people are pulling their orders, and we don't even need aggressive traders, yet price is moving. Whereas the stars is price abruptly shifted with an aggressive trader trying to shift momentum. So we get the arrow here on the down, meaning that there's somebody here trying to absorb these buyers. And they're adding to their order or doing something else out of the ordinary. It doesn't mean that we can't break that high. In fact, the better trade is when we trade just a little bit higher and then he shows up again. And like I said, I just don't know the pattern for ES, but I know if I saw this in NQ, what I would expect is a test above like this, a rip down, and then I'd be watching to see if the next bounce up got rejected, but I don't know if that's how this works in ES. I also don't know how often they even hold when they're this out of position. See, these sellers really belong up here at the top of the channel, and he's at the very bottom of the channel. And we had an aggressive buyer here, right? So think about this like sequence. Aggressive, like they push market down, aggressive buyer shows up, pushes market up, seller shifts volume down, tries to support his selling, right? Not up here, but right into the same location as that aggressive trader was trading. What does that mean? It means that there's some disagreement here about whether or not the market should go higher or should go lower. And so, in other words, this is probably developing some sort of a pivot. And so you want to go with momentum or wait for one side to win the battle and then get a retest, which is more likely to happen on NQ than ES, but if you want to know that what I see, that's what I see. These are speed traps, these diamonds inside the bars. It means a relatively large trader got like stuffed. They put in their order, price went a little bit further in their direction, and then suddenly their level got whipped through. We've all been there, right? Where you like buy with full size, you're targeting like maybe 5 points, 10 points higher, depending on what you're trading, and it goes like 2 points higher and just flushes, right through your buy order and doesn't even pause there. That's what the diamonds are. They're not always trade entries. They have to be positioned correctly. When they're in the middle of the channel like this, they often chop, like just like this, right? But when they show up back to back like that, then this one is usually confirmation that we're going higher because we chop, break, retest, close higher, put volume above it. So now I'm thinking more bullish, and if they can pull back and bounce with a green bar or star, it's a better long. It's an advanced trade, but it does work. Okay, the volume point of control is all the way at the low down there. Where was it here? We've established volume above both. A green bar and a pullback is a perfect entry here. I want it down here though, not up there. It needs to be down here. A green bar like this, another one of these, showing up like right here would be amazing for a long. Shorting here is a little bit dangerous because you've got the VPOCs down here, and so this is now support, more or less. They pivoted out of here. So what I want to see is bearish bar, green bar, and then I'll get long. Like if the green bar could close back right here, that'd be perfect, but don't always get it perfectly. This will trigger short, but I'm going to skip it because I don't see this taking out the low here on the first try after that pivot. Could be wrong. Technically it's a short. It triggered on ES too. Let's see how bearish we are. We're about to find out. If it's really bearish, they'll just rug pull it, but I don't know. Doesn't strike me as super bearish at the moment. They traded above this arrow with only pink bars and then immediately shifted volume lower. Curious what they do with that. I wonder if that's actually bearish. Here we got a real bar up here that's not pink, and it was on decent volume. you'd think with that bar showing up there that buyers are going to support a pullback, but you never know. VPOC is right here. So the dashed pink line is the 30-minute VPOC, volume point of control. And sellers need to break under that to shift this market. So that is the primary reason not to take that orange bar, pink bar, orange bar, is that you're like near the VPOCs, but not breaking through it. And see, when it gets down here, and then you break over it with volume, you can get these aggressive scalp opportunities. And so this one really did turn into something. I probably would have only taken this leg. But I mean, that's at least 20, 25 points. And then if you can hold the pullback, it's more. This one's really hard to buy. But you did get volume over both VPOCs with this bar here. And so a pullback and a sign of aggression here is technically a pretty good scalp. But like I said, the better play is when they pull back and then give us a star down here or a green bar down here. I'd much prefer it down here. If it's up here, it's really aggressive, and I don't like it. It doesn't mean it can't work, but it is more aggressive. I want them to print another down bar. Otherwise, the problem is the higher you are on this channel, the blue lines here and the gray line is the midpoint, the higher you are on that, the more momentum you need to continue the market in that direction. The more like aggression, strength, and volume and all that stuff. So it's not that it can't happen. It's just like I don't see I don't have like the vision of like we're not trading in a bullish market, so it's like it's hard to think that it's just gonna like rip right up, and that's basically what we would have to do to buy a star this high in the channel. If they do print a star here, which they might, we can still get long on a green bar below it. So I will skip the super aggressive trade. Okay, good. It didn't even trigger. So nothing to do. But I was right to skip that orange entry. And again, that's thanks to the 30-minute VPOC being on on this. You'd have to just identify that it's too far down on the channel. But when it's really bearish, those do produce scalps. But see how this one didn't really produce anything? And then it just goes a little bit higher than it and then tries to trap back in. It's not at the top of the channel. It's in the middle of the channel. The likelihood of that producing a big move is lower. Like this. Same exact thing. Right? We're not above the channel. We're closing near the middle of the channel. It does go a little bit further and then just rips. This one way up here, much better risk reward. Same thing here. Way too low in the channel. It goes a little bit further and rockets. Same thing here. This one doesn't work really. Comes up with a star. They get one more push. Orange bar right in the right spot. You get to the other side of the channel. So the location of these signals matters a lot. A lot. Well, now that's just kind of getting choppy. I will say if bears were going to take this, they need to increase the speed here. Otherwise, the stops up there at 10,950 are probably going to get hit. The lack of any like commitment on the seller side is palpable. Like sellers need increasing speed and like panicking to really like start ripping down. And the price action is just not that exciting. And so it's really hard to get a big momentum shift, like an impulse move down, unless you've at least got some volatility and some speed. But it can grind higher very easily. there's really nothing to do here other than wait. Good time to ask questions if anybody wants to. As far as what the candlestick chart looks like, you can see that on ES we rejected in the afternoon, literally right off the voodoo range level. It's kind of neat. To the tick, by the way. All right, traded below it, couldn't close below it. Put an excess here just slightly. And then higher low was at the voodoo range level. We then orbited around this one. See that orbiting? That means we're probably expanding in range, and the highs and the lows are likely to get taken out. They took out the high, they went lower, they put in a low, they took out a high, then they took out a low. See that? This one here didn't quite take out this low yet, so it's possible that we're going to swing down and take out some of these lows, only to come back and put in a high, then that high gets taken out. That's what you usually see when they start orbiting. If you see my video about it, about the voodoo range, I explain that. How when you get back and forth, back and forth, back and forth, both this high and this low are likely to get taken out. See that? Really, really hard. Unless you know that. If you know what's coming, then it's not hard. But if you don't know what's coming and you think it's bearish or bullish, your stop gets hit. But see how we've got these purple pivots and we're basically just like getting stuck in between them? It's a suggestion that we're not trending with momentum. And instead this is just some sort of a balance period, which I call negotiation, because they're negotiating back and forth without any side actually having any control. But the market agrees that this is all fair value, but this is too expensive and this is too cheap. So it moves back and forth in here freely, relatively freely, but not in a straight line. It goes from one pocket of liquidity to the next, seeking out stop losses to hunt. Here, 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 here. Those are your targets. See how this one gets taken out and this one gets taken out? Then this one gets taken out. Now this one was so high they can't get to it, and this one was too high they couldn't get to it. But what you'll see is they put in a high here, that high gets taken out, that high gets taken out, right? And so once you start to get a feel for it, you won't know which way is coming next right away. It's not like it's a simple pattern like 2 up, 2 down or something. I wish it was that easy. But what you can do is you can just say like, how vulnerable is the most recent high or low? High or low, right? Usually it is a high or low, but also like the highs, and especially the lower highs. But that could be at any time frame, right? So like this is a high, this is a lower high. This one is likely to get taken out, right? On a higher time frame, this is a high, this is a lower high. This one's likely to get taken out. And then on the other side of it, you could say like low, higher low. That low is likely to get, low, higher low. This low is likely to get taken out before they can move higher. Right? Like it's not a simple pattern, but it's a pattern. So the important thing is to identify that we are in an expanding negotiation phase, and not to get too bullish or too bearish, and to only trade in the edges. While they trap back in here without making a power bar. So I don't have an entry here because we came off a low, not a high. Yeah, I don't have an entry there. Like it kind of looks like they are going to try to push it lower, but I don't. We've now traded below the POC. That's why I say that. In both of them. See, it's under the pink line, pink dotted line. We've gotten under it. This one put volume below it. This one didn't. ES did not. Yeah. But one way or another, it's pretty balanced and there's not a whole lot going on. So if we do get more trades, it's going to be after we leave this area. Once you start to see this kind of price action where like the market just isn't really going anywhere, and it's like the setups are like getting immediately stopped, and then like maybe if they trap back in, you can try it, but where's the target? Like the edge of the market's right here. You know, it's just not going anywhere. The range has contracted too much. The best thing to do is not to choose a direction, in my opinion. It's to wait for the market to leave the area, and whichever direction it goes, then like that's where you start looking for trades, is after the market leaves. But if you try to pick a direction here, like you probably have like maybe a little bit better than 50-50 chance, because like either one of these, you just have to say like which one's more vulnerable. This. I mean, it could be on any time frame. Like there could be a vulnerable high on like the 3 minute. Like right there, we just took out a high. Right? The only hint that it might be going higher first is that we didn't have a lot of speed. And for lows they had taken out, you usually need speed. Now we're getting some speed. So this could actually wind up only to roll over. Like now that we've left the area, now I can start looking for trades. We just need to leave that area and get over a high or under a low. But now I can look for trades. We do have some pink bars on ES. I'd really prefer we get a little bit further away. Technically, ES hasn't really left the area. Now that I look at it, it's just dropping right back into it. It did travel over a high on a very small time frame, this. But your target's just right back into this zone. We're just trading from one zone to the next. So it's like, you can take it, but you're gonna, the bar will close down at 13. Like, you might get a turnaround at 9. Like, do I want to risk 5 or 6 points to get 4? Like, not usually. Not when I could just wait for it to expand the range and then have a chance to get 10. But I'm definitely not buying a breakout, that's for sure. Because there's no momentum. It's not one-sided at all. It's like the worst time to trade a breakout. Doesn't mean it won't work. It's just, it won't work often enough. Like sometimes it'll be the very first breakout that turns into this huge move. And you got to be cool with just knowing that that's not the trade that this setup is built for. Like, that's a great trade for someone who's been taking longs every single time you break out, and they're right 30% of the time. But that's not the way we trade. We want to have the reverse. We want to be right 60%, 70% of the time. And, yeah, like, that way we don't need a huge risk-reward ratio. Like, I can be totally cool even if it's not 1-to-1. But that's because I'm a mean reversion trader. It's a completely different game than momentum. But I have tried to trade momentum with futures with this system and with other systems, and it is really tough because it's like usually there's just no momentum. And so you end up having a ton of like drawdowns, and then the days when it does finally get going in one direction, you need to be committed to holding those positions all day. Some people are great at it. I'm not. Like scalping and mean reversion fit me so much better. Which is funny because I grew up like as a swing trader, not grew up, but like started trading as like a crypto swing trader, and then eventually options. So you'd think it'd be the opposite, that like because that's all momentum, but with futures I could not do it. Like I had the strategies, I just didn't have the skill set to like put on like two minis and see the move go like, well, first of all, like try over and over again and just like lose like $600, $600, $600, $600. And then finally the big move comes and it's like I've got this drawdown of like 5 days where I've been trying to catch the move and it didn't happen. And the breakouts all failed and I took these like tiny paper cuts. And then like, yeah, it finally starts to move and maybe I'd make like $2,000 that day. And then it would flush at the end of the day and I give it all back. And I'm just like, well, how the hell do you do this? It's tough. So I'm just like, you know what? That's just not my style. It's just not for me. It wasn't scalable for me psychologically. I can't be in my mind, if I see it as a big position, the idea of just holding it all day long and knowing that like I could give it back was just like excruciating. Whereas with scalping, it's like, I'm cool just waiting because I know that I'm going to get that like relatively easy layup if I wait long enough. And then when it sets up, I'll just take that trade and then take another one like that and take another one like that. Like I don't have to be in the market when it's tough at all. There's no reason to. It's just wait around for the algorithm to tell me when the opportunity's there. But the algo sure can't tell me where it's going to close at the end of the day. You know what I mean? I don't have that power. They're trying to turn it here. You can see they turned it pink in the background. And so buyers are trying really hard to push this higher, but they're way at the top of the channel. It's actually very dangerous. So if sellers can just get us back to here, it could actually end up being resistance. And the great thing is trading mean reversion, every once in a while, I'll stumble into a huge momentum trade on accident. Like it just happens to go like we saw before, like 50 points. Like that's a great trade for me. And I didn't even do anything different. I just did what I always do. And sometimes I make 15 points and sometimes it's more like 50. And then sometimes I lose 15, you know? But more wins than losses makes that math work out in the long run. Significantly more wins than losses. There's no signal yet. They did get the arrow here, but I would need a breakdown, a retest, and a rejection on NQ with like an orange bar or a star. Otherwise, it's just an aggressive sell without a pink bar here. He is potentially getting trapped though, so it may just cascade down. But I don't have metrics on how often the arrow adds to the opportunity there. I've seen it happen. I just don't know how often it happens. Make sure I didn't miss a trap. No trap. Yeah, I don't have a high odds setup there. But instinctually it looks pretty strong. But in my experience, what works better is when this is pink. Otherwise, they can trade underneath it, find buyers, and bounce right back. And then if they reject, it's a better play. And then over here, it's just kind of a bigger bar than expected, basically. They traded a lot higher than you'd think for a bar that closed bearish. That could mean that buyers are actually like getting aggressive, or it might mean that buyers are giving up, but we won't really know until the next bar. If the next bar screams higher with another diamond up here, then ES is a long, but it's a breakout and it's a momentum trade and there's no momentum. So I'd skip it, but it would technically be a long. Just not in my game plan right now because there's no momentum. Other than that, I need a retest. That's the only other way I can get in. Like I said, instinctually, it looked like a pretty good sell, but I don't have metrics on the arrow with the diamond alone without the pink bar before it. Like I said, with that star at the very highs, that star getting trapped could definitely be a problem for buyers. But I don't, on this time frame anyway, I don't have a high odds entry. And you'll see on the Trading Perform one, it's just the star at the top and that's it. This is ES, yeah. This is ES. See, I've got the star at the top and then just no algo. So it's like, don't do anything. And usually the algo knows what it's doing. So yes, sometimes it will miss trades, but usually the repeatable patterns show up on Simon's algo. Like I said, the added things that I've added, like the diamonds and the arrows and the backgrounds, stuff like that, it can offer me some more aggressive trading opportunities, but it primarily is for confirming and keeping my confidence up that, like, of all the valid entries, this one is better. Like on the one of the better opportunities compared to like other entries, but it doesn't usually make an entry out of something that's not an entry on Simon's chart. Because the win rate with like just using this alone, the win rate's great. But I thought I could improve it, and I thought I could maybe give myself, I could execute better, basically, with some, like, identifying confluence. Because I'm not always that good at hitting the button, even when it's valid. I will hesitate and wonder, like, if I'm missing something, and I'll overthink it. And so the two options are basically take every single trade and just do what you're told, right? And I'm not very good at that. Never was. I've always kind of been rebellious, personality-wise. I like to figure shit out on my own. And so, like, someone just saying, like, you're supposed to sell this, like, isn't enough for me to, like, confidently sell it. And even when I see that it works, like, I still want that confirmation that this is one of those times when it has a high likelihood of working compared to the times when it won't. And I'm willing to sacrifice some aggressive trades for the opportunity to improve my win rate even further. And then if I can identify which aggressive trades have higher win rates, I'd much rather take those rather than taking 100% of the trades. Does it mean I miss out on totally valid trades? Yes. But I also skip a lot of stumps. Not all of them. Not even close. But yeah, having some location information also just like it helps me realize that like buyers are here, sellers are here. Like any trade I take here is going to be aggressive just because there's no range. And that's not totally clear to me on this chart. Like you could just say it's probably going to stay inside the channel, and like that's probably true. but I don't know where the pivots are. I can't quite see the pivots, whereas with mine it's very clear where the pivots are. Because they happen whenever you start seeing these backgrounds. See where the purple background is and where the pink background is basically where they're going to pivot in the future. You don't know how far they're going to go beyond it, but they're going to try to pivot from there repeatedly. All right, so we might get that retest. If it gets up there, we might have a scalp to the short side. It needs to reach in there and then roll over and give me a star or a diamond or an orange bar would be the best. Preferably with a pink bar before it, but technically doesn't have to have it now because it's at location. And we are under the VPOC, right? Yep, it's at the high. Okay. That's interesting. They're trying to support the long side with aggressive buyers. Not what I expected, but not short, so that's okay. Pink bar on both products. A trap back in here would be perfect. If it could just trade a little bit higher and then roll over, that'd be ideal. That VPOC is right here. The 30-minute VPOC, that pink dotted line. Oh, fuck, that's my trade. Fuck,
Order
fuck.
filled.
Okay. So, star in that area is usually good for a trade. Now, it might stop out, in which case I'd have to come back and take it one more time, and that's okay. It's worth it, in my experience, to take it one more time. So we are short, and it's just a scalp. They may just chop you up here, like it. Star up, triangle up, star down. It looks like a momentum shift, but it doesn't always work out that way. I will once again be taking profits relatively quickly if they start moving for me. There's a good chance that this green bar holds. Oh, are they going to stop me? It's just a little too choppy, and you see how slow it is? It makes the short really hard. So if they sneak up there and take me out and set up again, I have to take it a second time. But for now, I've just got the 15-point stop, and it either stops me or pays me. It's like, if that's the retest that's going to roll over, it happens right away. Like, the next bar will be bearish. If it's not, it's chopping or it's bullish. So, end of the day, you're either right or wrong. Once you made that decision, there's really nothing to do here other than wait to see what they do. I already decided I would take that entry. So you just push the button and let it go. And sometimes it's a stop, sometimes it's not. But oh, ES set up too. Big bar, orange bar. High volume on this one though. They might have to trade behind it. It's just choppy price action. And it's really fucking slow. I want to get at least 10 points. I don't know if I'm going to get it. Just that failure to release down here is not a good sign. I don't hate just bailing on it when it doesn't immediately drop. It's really frustrating when then it goes on to work. And I'm not very good at handling that. So I'm better at handling the stop as long as it's a valid trade than I am at handling bailing and then seeing it work. But my instincts are, if it was going to go down, it happens right away. So, but I'm telling you, like, can't tell you how many times I've thought that. Bailed and then seen it roll 50 points. So the truth is, at least for me, my instincts are nowhere near as good as the algo. So sometimes I'm right, but not enough to override what the algo tells me. And the algo says there's an opportunity for a short here. That's all I need to know. Tempting just to add here, but I'm not going to do it. As it like approaches my stop, you can add to your trade and like then you can get an opportunity to exit like 5 points lower and like basically pay for your risk that way. But you got to be really good at setting your stop and making sure that like your brackets are right. Otherwise, it can be really painful. It does look like they want to stop me, but I'm not going to bail on the trade. They're going to have to physically take me out, and then we'll see what happens. But had I not taken the trade before, this is actually a great place to take the trade when you can actually have like a super small stop, like half the price. It's basically, the short is like half off. 50% off for the short, but it's up there. And then, like I said, as it drops like that, you can, like, let's say you risk 5 points and you took like 5, you could take 3 off at 5 points and then like just leave your runners as long as you can, because even if it rolls back on you, the most you lose is 5 points on 2 bars, on 2 contracts. So yeah, like it makes it easier to like wiggle out of the trade without losing money. You just have to be fast, because if you fuck it up, you can take a big loss. like even that little drop that it did right there, like would have gotten me break even on the trade, and I'd still get to hold runners, and they probably stop me here. They haven't yet. Looks like they're gonna stop me. I do not move it though. The stop stays there until they hit it. Or don't. Yeah, this is just a very choppy place to get into the market. That was the risk here. Is that it was a choppy place to take an aggressive trade. And like risk reward was potentially suspiciously questionable, but I went ahead and took it. And at this point, there's nothing I can do about it. Rules say leave it alone. Here they come. Oh, still didn't take the stop. Still in, surprisingly.
Order canceled.
All right, they got me. Okay, now we got to see if they trigger it, because if they now rip down, like I actually have to take it again. Looks like they're not going to do it, which is fine. Oh wow, it's getting late. They basically double topped that and then tried to turn it around. It's suspicious that they didn't rip through that higher pivot. I guess that would have been a reason to not take the trade, is the fact that we had a pivot right above us here. That might have been a reason not to take the trade. Because it's better to let them do what they just did, where they take out that pivot and then short it. That's the better play. Is to short the trap back in. If they trap it, like if they put an orange bar here or a star, it's better. It's way better if you get pink bar first, but we got it just kind of a little bit too low. It was pretty aggressive. And the location was not ideal. So maybe that was an error. It was valid, but it was just maybe more aggressive than I should have been. But that's all right. Still green on the day. But of all the times to be aggressive, maybe that wasn't a very good spot to be aggressive because it was so choppy. And like you're right here near the 3-day VPOC. Although that is, it looks like it's shifted down. If they break the star here, I really have no choice but to take it again. Ugh, it's no pink. There's no pink bar, but I kind of have to do it if they trigger. Don't love it, but pretty sure it's a must. I guess I wouldn't have to take it immediately. I could wait to see if I get like a re-offer to get in.
Order filled.
All right, we're gonna give it a shot. If it's not gonna work, it's not gonna work right away, and then I'll probably just call it a night because it's just getting too choppy then. But if this just rips higher right away, it's like I'm not gonna take it more than twice. Like this one was a little bit too aggressive. I think this one's okay, but like the fact that this is like almost a double top. See that? Let me just get rid of this line. I did do this right? Oh fuck, is that not? Oh yeah, no, the red line. Yeah, so the red line is broken and it's gone now, so it's valid. We'd prefer it not to be purple though, because like there is an aggressive trader in there, but buyers are just pulling their orders. Like liquidity is decreasing, so like they need speed to push this down, and I don't see any. There's no momentum, so that needs to increase. Otherwise, like yeah, it's not gonna work. I'm gonna take. I think I should take like 3 off, if they'll fill me. Oh come on. I'm gonna try to get filled on 3 at 9. I was sitting at 10 points, but they weren't filling me, so I scooted it up to 9, and they still didn't fill me. Just didn't. The purple bars make me a little nervous. I really want to get my risk off here. They missed me by 4 ticks. So I'm gonna try to get half my position out when we get to the low of this rotation. If it like swings down there, I'll just take. It'll fill me for half my position, and then we'll see what we'll do with the rest. I might be a little more aggressive here just to get that stop back, because I am feeling kind of tired. So let's see. But like I said, I would have liked that to fill, but I missed it by 4 ticks. So I got a little anxious, but doesn't mean it's not gonna work. It's just. So I'm gonna split up the rest of it. I'm gonna take half now, or half here, and then split up the rest into 3 parts and see if I can push, just in case they just drop it. But I'm probably gonna exit early. But I am gonna go ahead and take some profits though. I have to. Like you don't.
Order canceled.
You can't. Yeah. So half my position off. But that's only 9 points. It's only a piece of. I'm not back to the high water mark yet of the day. So I need another 5 points. And I'll go ahead and take another, and then I'll leave 1 in case they flush it. Okay, let's take one more flush, please. I'm gonna take it right here if they give it to me. I just want to get a little lower. It's just so slow. It's hard. It's like it's not even that much pressure. It's just slow. So I'm trying not to freak out about it. But like this slow chop is really hard to stay confident in. Well, I'm short NQ over here. But the purple bar, bearish bar, this one really needs to be, if it's green, I'll probably just have to exit the rest for a small win. It really does need to go lower, otherwise it's just too choppy. And there's no speed. And it doesn't mean it can't go lower, but like this should be like dropping already. Well, that's why I took the 4 off. Because a lot of times this just chops around. Yeah, that's going to turn green. I'm going to have to get out of break even, I think. For the rest, I mean. Let's see. If it closes green, I'm just going to get out of break even for the remainder half. And so it won't quite put me green on the day, but... Or no, it'll still be green on the day. It won't quite put me back to the high water mark if it closes green, but it'll put me within striking distance of high water mark. But if they just want to dump it now, that's cool. I will take profits if they shift lower. I'll take a piece of the last half off. I'm gonna take that in pieces, 2 or 3 pieces.
Order canceled.
Got one. Let's see if I can get another one a little lower. If they can speed up here, I can hold one. But if they don't speed up, I'll just exit it because of this. So now I'm back to the high water mark. So that's good feeling. Got that 15 points. So I could just exit here because of the trailing drawdown. It's not a horrible idea. But you can see speed was increasing a little bit. And that's what you want on the short side. So like it's tempting just to hold it a little bit longer and see if they can just flush. But that it's right at that support and like they're not doing it. So like you can only have so much patience. Eventually you just kind of have to say a win's a win. With this trailing drawdown, it's really important not to give back a lot. So just the failure to push lower quickly makes me want to exit the trade. It's only a small piece left, but giving back on this would suck. Right, I'm going to go ahead and exit it. Let's see where it goes and see if those instincts are right. It's just too choppy and there's not enough increased momentum to really be confident that they're going to flush underneath 900. And so, like I said, I'm back up to high watermark. That's what's important to me because I'm going to go to bed and come back at regular trading hours. Technically, there was no signal to get out of the trade, but since it's going to be my last trade of the night anyway, it's not going to affect me if I end up tilting. So if it like would have crushed down and I would have been pissed at myself about exiting, it's that I wouldn't be able to do anything about it because I'm too tired to take another trade. And I'm going to close this up in a minute. But like I said, my instinct was this needs to speed up, otherwise it's just going to chop in here. And they tried to speed it up, and you could see it kind of, the momentum started to come in, and then they just paused once they got to that same support that has been repeatedly stable, and that started back here at this purple pivot. See how they just established volume above it, pulled back into it, found buyers, established volume above it, pulled back into it. You kind of expect they find buyers again. And so it wouldn't be a horrible idea if this closed green to actually go long. And then on ES, what's interesting though is that they got this arrow coming back again. So like a seller supposedly is trying to hold this market down, but they traded above him and he came back again. And you'd think that's pretty bearish, but like I said, I don't know. I haven't watched it long enough on ES to really know. There's the green bar. I'm pretty sure that's a buy. But there's no purple bar before it, so it's a little bit sketchy. And I don't know what's up with these arrows. Like, that shouldn't be bullish. It's probably just choppy, and that's why it doesn't make a lot of sense. It's just a chop zone, and so they're like we're getting these signals, but like they're not gonna really play out. Because it's like there's an aggressive trader, there's volume shifting, all those things are happening, but then they just run into support and resistance, and it doesn't, like, they just turn it. So an aggressive trader doesn't do you any good if you're trading right, like, if an aggressive buyer doesn't do you any good if you're trading right into resistance. And an aggressive seller doesn't do you any good, or a supportive seller doesn't do you any good if they're trying to sell it right into support. So it's like you're going to get the signals and it's not necessarily going to do anything just because it's so choppy and flat. It's just not the time you want to be trading, right? It's time to be sleeping and come back in like 6 hours and you'll get range and then the signals start to work again because like they do work, they just don't work for enough to get your risk reward. Like they do produce the move, it's just not the 15-point move I want. But there's no way I would have held through that green bar. So if they just flush it now, like that's just unfortunate bad luck because there's no way I would hold through that volume shift higher. They may just not do anything with this and just let it sit here for hours. Like, I'd hate that, but it's possible. Well, let's give it a second to see if it's going to break out, and then in one way or the other, just kind of curious if this long works since it's kind of aggressive. And I'd like to know more about what these arrows are telling me at the moment with this new calibration on ES. Like I said, I know how to interpret them on NQ, but ES is just a bit of a different animal. And I'm not totally sure if it means that once we break it that it becomes momentum or what, because it's in the middle of the channels. They might not even be that useful. I don't know. Looks choppy, that's all I can tell you. Probably both of those trades were a little bit too aggressive, but it's all good. But all's well that ends well. Yeah, I don't really know how to interpret that on ES. I'm not sure what to think about that. Other than it's probably a sign that it's very choppy to get these anywhere other than resistance. It's basically saying that they're trying to protect whatever, like this guy is like getting this guy is selling again lower. But then you'd think there's sell momentum. Oh well, maybe there is. So I think, like I said, it doesn't. I guess that might be what it is, but I'm not sure. Certainly not confident enough to stay short. But like, why is he moving his order up, basically, is what I'm wondering. Like, he's in here somewhere, selling, they break past him, like, he doesn't reload, and then someone comes and reloads again, they break past him, like, are they gonna It's just a weird pattern. I just don't know what to think of it because I'm not used to trading ES. But like I said, I don't even know if those are calibrated correctly. So we'll see. It may be a sign that I'm getting too many of them. So see, the green bar does produce some kind of a movement, but now we've just moved right into resistance. So, like, I guess what you could do is you could go on the higher time frame and say, well, what does it look like on the 80 tick and the 10 tick? And on the 80 tick, you have a trapped seller down here. They traded up to here. They signaled short. We're now coming back into that resistance. And on the 10, on a yes, yeah, see all the blue arrows? So it's like buyer somewhere in this candle, but this candle goes from 09 to 17. And then this one goes a little higher and it's like that buyer's still buying. And then this one is like an inside candle and buyer's still buying. So like I don't know how to interpret that other than to think that that might be bullish. But if that's as long as you don't break behind them. But then what happens when you do? Like what happens when you get behind them? Like here. Got behind them, sell didn't work. Got behind them, sell didn't go anywhere. Maybe get behind them and then we sell one more time and then rip. That might be it. Whereas here we can't get behind them. That might be it. That'd be pretty simple, but that might be it. NQ is a lot more complicated than that. But it might just be literally like draw a line, see if you can get beyond it. If you can't, they're in control. So it'd be here. And initially here, we got behind them. And then you draw a line here. And you'd say, okay, as long as you can get this guy to be bullish, it's going higher. Because he's trapped, the yellow arrow's trapped. It does not work like that on NQ. NQ, it's like get behind him, go back, test him, then wait for an aggressive trader to come back in and reject, right? Like you need all these rules, but it's possible that ES is just simpler. But if that's the case, then this green bar should hold. And that would also mean that yellow arrow green bar or blue arrow orange bar would be pretty good trades. I wonder how often that shows up. That's the opposite. That did not work. Yellow arrow orange bar works. Yellow arrow star works. Yeah, blue arrow, yellow arrow on an orange bar does not necessarily work. Yellow arrow, one bar, then star works. So this guy got trapped and it just goes. Just like I said, I thought might happen. Here's this one. Blue arrow, one or two bars, orange. Does trap back in, but prints a yellow arrow, so I don't know about that. It's got another piece of... Okay, so this one's yellow arrow, green bar. That one fails. It's got a blue arrow on it. But then it comes back and it rips through it, so not sure. All these just don't do anything. So if they're not in position, it's a problem. You really do have to trap them, it looks like. So like this. That's very similar to what I say in NQ. Yep, and that works. Okay. Well, in that case, it might be bullish. Wouldn't that be fun? So like gap up tomorrow? Might be interesting. Oh wait, let me check in. What do I have on the 10 tick for that? Blue arrow, green star, go. Blue arrow can't get traded underneath. Blue arrow can't get traded underneath. Blue arrow hasn't gotten traded underneath. Yellow arrow, resistance? Maybe. Immediate sell. Oh, here we go. Out of position, blue arrow, orange bar, short. Gets trapped out and then goes. Yellow arrow, orange bar, gets trapped out, goes. Ugh. That was gross. Oh, wow. That's weird. Trap the yellow one, blue arrow takes you higher. Trap the blue one, yellow arrow takes you lower. Okay. It actually seems like they work often on their own. Not always. Like this. But look, when it's in the middle of the channel, it gets trapped. And then that zone gets you short. Yeah, look at that. Okay. Well, that's cool. Does that work here? Let's see if that works on this time frame. So it'd be like this. Get behind him. He's trapped. Come back in, get a buyer, and you should be long. And that's interesting. Wow. Trapped. Does it come back? It doesn't. That's what's hard. It doesn't always come back. Oh, here's that other location. Blue arrow, yellow arrow, short. Yep. This one gets trapped. Right here. Blue arrow, yellow arrow, short. No. Take off. Does this location get support? Yep, there's your entry. Yep. Well, that's cool. Wow, so he gets trapped even though he's well positioned. They trade over him. They come back in. Oh, but we got another one though. Yeah, see now they can trade under it. Now it's probably bearish. Yep. Here we go. So this one got trapped. They trade back into him. Probably goes higher. Yep. Okay, that's actually pretty simple. I will continue to watch that. So the basic premise is similar to NQ, but easier. Mark it off, especially when the yellows are too low or the blue is too high. Get volume beyond it, or behind it. Come back in, get a signal that there's aggression to the other direction, and you'll get a reversal. Okay. So that makes that green bar a buy. That's straightforward enough. Looks like it's working. Yep. See, on NQ, that's the 80 tick. On NQ, the background colors work better, but like, let's see, that's not a good example. So you'd think when you get, well, he's not out of position. That one's not out of position. He doesn't get beat. Here we go. Oh no. All those are in well, they're well positioned. Yeah, none of these are out of position. It's like they don't print. Here we go. Out of position seller. Trade above. Pull back in. That's a long. He has to take it twice. Yep. Once you get over this well-positioned seller, which happens here, pull back into it. Another blue bar, so I don't know. It does work right there. Oh, interesting. So you need another arrow. They try to below that arrow, trap back into the arrow, and it's good to go. So this guy, you'd have to do the same thing because he's well positioned. You have to get under this. Doesn't happen. Under this. Oh, they get over the well-positioned one. Pull back. So this one probably won't work because he was well-positioned. They have to get behind another blue arrow. Oh, the green one let him go. So they got behind. So they got behind a pullback. Shifted volume higher. Oops. And then it definitely goes. Blue. Does it trade underneath that? Yep. Does it come right back up? Right there. Blue. Trades below. Does it come right back up? Oh no, not that time. No, not that time. So this one got trapped in position and they just didn't hold it. And it becomes support? Kind of. Kind of. This one gets beat. They try to reject out of it. Trade behind. You'd think this one works, but you'd have to get one more try. Oh, then you get another one. I see. Yeah. NQ is definitely more complicated. Because they don't print as often, and they're usually in position. With the yellow ones on the top and the blue ones on the bottom, and those are just harder to trap. And a lot of times you'll sneak above them and then just like crush. But I'm pretty sure that's resistance. And this one would be support. Okay. And there's another one right above it though. There's another one right here. So like that's just all support? Like, I don't know. I think the purple backgrounds work a little better for that. Thank you. And this one happens to line up pretty much exactly with that. And then you get the trading range. Okay. Well, interesting. I'll keep watching it. I'm going to get some rest. I don't know what this is going to do. Right now it's not doing anything. And I can't stay awake and it's 2 in the morning here. So I'll see you guys next time. Hope this was helpful. Let me know if there's anything else you want to see me do or talk about or learn or whatever. Yeah, holler.